I got this question about interest rate buydowns. Now, keep in mind that the answer to this is going to vary from lender to lender and also from borrower to borrower. Not all borrowers have the same credit score, down payment, doing the same type of loan. But I wanted to provide an answer to this. And so here's a general breakdown of how an interest rate buydown would work. And what an interest rate buydown is basically you're paying extra up front to get a lower interest rate than what you would have gotten without paying extra. In my opinion, I think you're wasting your money, by the way, and I'm going to explain here why. When you look at these interest rate buydowns, basically, like I gave you an example right here where if you were borrowing $600,000, I gave you several different rates, a rate on the top with no points, meaning you don't pay extra, and then all the way down to the lowest rate on the rate sheet where you're paying like 5 points to get that interest rate. And what you'll see in this chart is the monthly savings that you would have if you were to pay extra to get a lower rate. And I tell you, I don't know about you, but if you look at this, the numbers aren't that impressive. You're not saving a whole lot. But when you go all the way over and you look at the return on your investment, meaning how many months does it take for you to save X amount of dollars for it to make sense for you to pay X amount of dollars extra in fees up front? And what you'll see is in most cases, it's going to take you 2, 3, 4, 5+ years to break even. So the question is, are you going to refinance? The likelihood right now is yes. You're going to refi before you end up getting your ROI because rates are like at a peak and they're going to come down and everybody will refi. So the people that are paying points and they're paying extra to get a lower rate, I think you're wasting your money. And then also you have to consider what lender you're working with. You got to shop around. If you go to Rocket Mortgage, for instance, you'll see that they charge a whole bunch of points. But then you could go to a lender down the street and there's no points for the same exact interest rate. So not all lenders are alike. So in every scenario, when you're considering whether or not it makes sense to buy your rate down, you have to consider how long it's going to take to get your money back that you put into it in the first place. Hope this answered your question. Keep them coming.